Here's another look at markets early in the trading day as investors digest earnings and the constant drumbeat of tariff threats from the White House and what it could mean to economies in the U.S. in particular. Our next guest brings us investing ideas in the tech and airline sectors. Lisa Schreiber is an investment analyst at Gradient Investments, and she joins us now. Lisa, let's begin with a big earnings story from earlier this week. There was lots of anticipation, as there always is, when Walmart reports earnings. The stock has been hugely successful over the past couple of years and has set very high expectations for itself. And the market was not in love with Walmart's forward-looking guidance, and the stock tumbled earlier this week. What's your take on those Walmart numbers?
Yeah, Walmart is the bellwether of consumer outlook in the U.S. So there was for good reason, a lot of focus on that this week. I think they crushed their numbers itself, but what the pain point for investors was their guidance, which is we have to remember with Walmart, and investors know that they are traditionally getting into the new year a little bit more cautious and a little bit more conservative in their guidance. But overall, I think, especially when it comes to tariff uncertainties, that also, Walmart is I would say less affected by that, but still they import a lot from China, from Mexico, so still affected by that. So I think there was a lot of focus on a consumer that may be retracting a little bit, and that is obviously an outlook on maybe an outlook for other retailers as well.
The stock is down today after yesterday's 6.5% decline. Do you view this as a buying opportunity? Is this an opportunity for investors who have not been able to own, have not bought Walmart shares over the past year as they've watched it march ever higher?
I would say absolutely. I'm an absolute lover of Walmart. You have to see that's such a long-standing company. Brick and mortar, traditionally, they were able to move into the e-commerce business and also maybe gain a little bit share from Amazon. They are absolutely fantastic in their deliveries, in their membership. So they absolutely crush it on that end. Lately, and when we see over the last year, the stock returned nearly 70%. So it reacts a little bit more as a tech company than what would you expect from a brick and mortar grocery supermarket. But I would say overall there is still, with the move down, opportunities to buy with all the opportunities that you have in the online part and the consumer overall. They are able over the last few months to also attract higher income consumers, which is fantastic. And I think those are the ones that will keep spending going forward, even if the consumer comes down a little bit and can help them going forward.
Okay, you mentioned Amazon a couple of times there, and in fact, that's one of the stocks you like, and so that's my next question. Talk to us about Amazon and why you like it.
So in markets like this, where we have a little bit more uncertainties and a little bit more volatility maybe ahead, we really like quality. Names that are their respective leaders in their spaces, in their sectors, and can withstand some of the uncertainties and volatility. And I think Amazon is a perfect example for that. They are absolutely crushing their numbers, quarterly numbers, and also when it comes to efficiencies. They have a proven track record of finding efficiencies and cost cutting, and also what is especially interesting for investors and what we like the most on that end is it gives you exposure and diversification on both the consumer and retail side and on their AWS side, their innovation and AI side. So all of that together, even if the consumer retracts a little bit, we still have a lot of possibilities in Amazon. And when it comes to their guidance on CapEx spending, especially with AI, actually they are the one of the Magnificent Seven. They are set or guided to spend the most on CapEx by far. I think that is justified here because they have so many avenues where I can benefit them, making the whole consumer experience better for their consumers, or increasing efficiencies in their warehouses, in their delivery process, in their cloud business and ads business. So I think there are so many opportunities ahead with Amazon. Again, it gives you the diversification in multiple areas. And when we look at the valuation itself, compared to other Magnificent Seven names, it seems reasonable given the growth that we expect here.
Okay, and another stock you like, and this is one we don't often hear about. We hear about the company, but not the stock all that often. Ryanair, the European deep discount air carrier, does trade in New York by way of an ADR on the NASDAQ green sheets exchange. We're looking at it now. Why do you like Ryanair Holdings?
Listen, the same story here. We like quality names. We like the leader of businesses in their respective space. And Ryanair is by far the leader in the cost-efficient airlines in Europe. They have a fantastic network of destinations. Their cost management is outstanding. If you ever fly in an Ryanair machine, you see it, you feel it. If they could, they would charge you extra for the air that you breathe inside the airplane. But to get it back a little bit, that's part of their deal, right? That's by now part of their fame. So I think together with their fantastic cost management, rising profitability, and together with the outlook of airline demand, especially in Europe later this year, and with their network destinations they have, I think they're a large beneficiary of that boom, if not the largest one. And again, valuations at this point seems reasonable for the growth we can expect here.
Lisa, thank you so much for this conversation. Lisa Schreiber,